Hi there, it's Anil Puri from 9 Pillars, and today I'm going to speak about revenue targets, why they're important, and how to calculate the right one for your business. I caught up with a client recently. I catch up with him every 3 months to review his financials, and over the last 18 months, 2 years, his business has really grown. He's put on more staff, he's got a different mix of products, and so what we decided to do was to review his revenue targets and really get him clear on what he should be focused on every week and every month to make sure he's hitting the profit levels that he wants to hit. Okay, so what I'm going to go through is quite a it's a bit of numbers, and you may not be comfortable with the numbers. A lot of business owners aren't, but just bear with me, and you can always re-watch this video if I go through things too quickly. But I'm going to go through a couple of things to explain some core and fundamental numbers that you need to understand in your business and how to use those to develop revenue targets for you and your team. Okay, now I warned you, here come some numbers, all right? So before I take you through the calculation on how to work out your revenue target, I need to first explain some of the fundamental areas within a profit and loss statement, okay? And some of the key numbers that you need to understand in your business. Now, here's an example of a business. It turns over or has sales or revenue of $50,000 per month, all right? We'll just think in terms of months. So $50,000 a month. It has what we call cost of sales or variable costs of $20,000 a month. Okay, now those are costs that fluctuate and change as revenue changes. All right, so let's take, for example, a trades business. Let's say it's an electrician. The more sales they do, they'll have more components, light switches, wires, cable, that type of thing. Okay, so that's what your variable costs are, or cost of sales. That less that gives you what we call a gross profit. Okay, so that's the profit that's left over after the job has been completed, before the office costs and all of your fixed costs are taken into consideration. Okay, so that's your gross profit. Then you have these fixed costs in your business. They don't change month to month generally. Okay, so that could be wages, car leases, rent, electricity generally, depending on the business. So they're your fixed costs. And in this example, this business, after paying for its fixed costs, makes no profit. All right, so it's a zero profit. Now, a couple of things to highlight and that you need to understand when you're looking at this sort of these figures in the profit and loss statement. The first is this here. Okay, so let's start with the cost of sales. In this example, this is 40% of the revenue. Okay, and the gross profit is 60% of the revenue. Okay, so you can work out there 20,000 divided by 50,000 is 40%, 30,000 divided by 50,000 is 60%. Okay, and this figure here is an important figure that a lot of accountants and people who understand numbers will speak about. And this is your gross profit percent or gross profit margin. Okay, and that's a very important number to understand in business. It really doesn't depend on what type of business, whether you're a manufacturer or a tradesperson, importer, exporter, reselling goods, whatever it may be. It's important to understand that figure. Okay, so what I'll do now is explain how to use these numbers to work out what your revenue target needs to be. Okay, so over here, I'll do some quick, I'll explain the formula. So, revenue target equals your fixed costs, so I'll just call those FC, fixed costs, plus your profit target, and I'll put some numbers in to explain how this relates to this in a minute, divided by your gross profit margin, okay, gross profit percentage. All right, so let's take these figures and work out what the revenue target should be for this business, and we'll assume that they want to target a profit of $10,000 a month, okay? So in this case, fixed costs here, 30,000. Sorry, 30,000. And let's say the profit target for this business is $10,000 per month. okay? And divide that by the gross profit percentage, which is 60%. Now we need to put that into, as a decimal. So that is 0.6 is 60%. So once again, that means 40,000 divided by 0.6. And I've calculated this before, that if you do calculate that, that ends up being a profit target of $66,667 per month, okay? Now, if you take that and you multiply it by that, take off that, you'll get 10,000, okay? So have a go at it yourself. If you do need a hand understanding your numbers, and it's important, some bookkeepers and accountants, they don't really get the split of expenses between variable and fixed, right? Okay, so it's important to understand that. If you do need a hand, I'm happy to just do a one-off session to help you understand your financials, review the numbers, do these sorts of calculations and help you understand what the revenue target needs to be. Because if you don't understand that, then there's obviously no way for you to get focused on a month-to-month basis or even a weekly basis to understand what sort of revenue, what sort of sales you need to be achieving. Once you've done this, then you can work out, well, what should your quote target need to be to achieve that level of revenue. Okay, so for example, if you know that you convert 1 in every 3 quotes you do, then you can work out, okay, well, I need to do X number of quotes per week, X number of value of quotes per week or per month to achieve a certain revenue target. All right. So let me know if you need a hand. Hopefully this has helped you with some understanding of some fundamentals of financials and how to use those to set some targets. We will be also running a webinar soon with our partners QuickBooks Online. They'll be explaining how their software helps you understand the numbers better, helps streamline how you can prepare your financials and just cuts down a lot of that work. So I'll send you some information about that webinar, so look out for that. In the meantime, if you do need a hand, give us a call, and all the best for now.